Hello and welcome, everybody, to Chart Request Live. Today is Tuesday. We do this show every Tuesday and every Thursday at 1 o'clock Eastern Time. I am joined, as always, by my esteemed co-host and friend, Patrick Dunawilla of the Chart Report. What's up, Pat?
How you doing?
Good, man. So we have missed each other for a week now.
I know. We got a lot to catch up on.
Everybody's been busy. You've been taking airplanes. I've been taking airplanes. We're both back in our offices now, and we got a full schedule on Stock Market TV this week, uh,
Yeah,
which which is probably maybe the first time I could say that all year because we had all these abbreviated weeks, missing Mondays, and we were traveling, but we're back.
you're right. You're right. Yeah, I mean, we had all those four-day weeks between Christmas and now, so finally seems like the year is kind of getting settled in. And man, looking at the market, thing doesn't want to stop. I mean, now I know the S&P is down a little bit, but what do we have?
No,
12 out of 13 weeks.
just gonna say that. Just gonna say that, right? This is really all you need to know. Pat's talking about from this bar here in late October. These are weekly sticks now. We've had one down week, one negative week. And which one was it? First week of the year, right?
Yep,
Those first 5 days.
just
Um,
to throw people off, right? Oh yeah, that's right. The first 5 days, that's a really important
the one
uh
every the one everybody wanted to be green more than any of them.
right.
But sometimes that's just how it works. The more
That's a
important,
great point. Yeah. And for those of you guys who don't know, Steve's talking about the first 5 days, which is a seasonal indicator. There are three kind of big seasonal indicators that happen in January. There's the January barometer, which is just the performance of January overall, which we should be getting. Does the month ends tomorrow, right? Today?
no, tomorrow. Yeah, yeah, right.
Tomorrow. So there's that. There's the first 5 days, which is the first 5 days performance. Has the ability a lot of the times to kind of predict how the year goes. I don't know if predict is the right word, but it just so happens that. And then there's one more. What is it?
First 5 days, January
Maybe the
barometer,
Santa Claus
Santa
rally,
Claus
right?
rally. Yep.
Right. The Santa Claus rally, which we didn't get this year. We missed it by a little.
So what do
Two
we
out
have?
of three.
And first 5 days, I think, was kind of mixed. So one or two out of three ain't bad.
Right.
All right.
But that is funny that was the one down week in the last quarter, basically.
Yeah. And more importantly, though, the point is, something like the S&P 500, we're above those prior cycle highs, right? And the NASDAQ, that's also true. The Dow, that's also true. It's really the Russell and the average stock index. So anything like the Value Line or Vanguard Extended Market or some of these broad, equally weighted, indexes, we really want to see these bases complete, right? And
Yeah.
with the Russell, again, we're right there. You get a nice big, full green stick through this little base breakout level to end this week. That's really what the bulls want to see. The large caps, the mega caps, they've been fine. They continue to be fine. But let's see that strength move a little bit down the cap scale, hit up some small caps. I want to see this base go. That's one of the things I'm watching this week. But why don't we hit the charts?
Yeah, real quick though, one of the more constructive charts I've seen this week, and I know we talked about it earlier, but I just want to bring it up real quick, is QQEW. I think that one's just, I saw that one yesterday. Chris Kimball brought it up, and that's just one that's kind of stuck with me the last 24 hours at least.
Yep, I like this. So looks a lot like the S&P 500
Yeah,
or the NASDAQ before breaking out. This one would speak a little bit to, I think, some broadening participation, right? Because
right,
sure, it's all large cap growth, but it's not Magnificent Seven driving this
right.
breakout, something like this, right? Because
Right. Now you're seeing some strength from other large tech. Maybe they're not the mega cap, but the AMDs of the world and things like that.
so great point, right? As you move out of the Magnificent Seven, ultra large mega cap growth,
Yeah.
right? Down the cap scale a little bit, but still large. just look at what these names are doing when they have charts that look like the NASDAQ equal weight, right? When they're confronting those prior cycle highs for the first time. What are these guys doing? So let's use AMD as an example. They're breaking through, right?
Yeah.
So what should we expect those indexes that haven't broken through yet to do? We should expect them to eventually look the same as something like AMD, or let's just look at a couple more because there's so many. Uber.
Oh, so many.
Same thing, right? Breaking through. How about ServiceNow?
Yep, great
Right?
one.
Breaking through. How about any one of these semiconductor equipment? Oh, that's not the one. Lam Research, LRCX. Getting through, right?
Yeah.
So what do we think the NASDAQ equal weight will look like? These are all NASDAQ components. Probably going to get through, right? Probably get that breakout pretty soon here.
Yeah.
So let's talk about one now.
All right, yeah, let's hit it. Starting off with the mailbag, Eric wants to see Marvel, MRVL, semiconductor, staying on that theme.
Yep, absolutely. Look, you got the 161.8 right here, and I want to get through a lot of charts today pretty quick, so I'm not going to remark them all.
Sure, yeah.
Already marked up how we want it. I would consider this here kind of the base breakout level, right? So 55, 56, kind of looked like we got the breakout done, fell back into the box here, rebounded. Now we're at this 62%. I think this range between the pivot high here from last week around 73.30. Let's flip it to a daily so you can see this more clearly. All right. So you got a little range here from last week's pivot high to the May 2023 and July 2023 pivot highs. That's your zone right now, right? You could trade this off of 66 and 3/4 all the way up to 73, right? But that's really the zone, the polarity zone that's in play right now. And then you just want to count on this one continuing to climb up the right-hand side of this base, which would get you just north of 90. So that could be a nice trade.
I like it. I like it. So this next one, thoughts on Ethereum versus Bitcoin, and what levels would be good to take profits on Ethereum, looking to hold for almost 1 year?
Well, thoughts on Ethereum, Bitcoin. First of all, I don't have many thoughts on it. I definitely don't have as many thoughts as it seems like everybody else does on this ratio. Seems to be very well thought of.
Well, let me ask you this. Which one are you more overweight?
I think they're probably the same. They're very close.
Well, and I know you have a lot of exposure to other altcoins, so you're kind of getting that Ethereum-like role, I guess, in a portfolio, right? Playing the alternative to Bitcoin.
I started with more Bitcoin because this is how I do it, right? I bought the reversal in Bitcoin, which happened first. I'm in the Bitcoin around 25 and then some more at 30. Really was accumulating in this whole range here last year, right? With Ethereum, I didn't get into it until more recently because here's the Ethereum chart. That base really just went, and it's still highly actionable where it is right now. So here's the Ethereum base. Okay. This is more the base breakout level. So you really just got this in December, right?
Right.
This is where you want to be accumulating Ethereum. So my Ethereum position is slowly catching up to Bitcoin, but I do want to be mindful of this, the ETHBTC ratio. And for me, I don't want to own more Ethereum than Bitcoin as long as this thing looks like this, right? We got this big run up following the ETF launches. Everybody's like, that's it. No, this is still a nasty downtrend, right? Sure. Do you have a clean level here at these pivot lows? I guess. Pretty sloppy chart. There's still little to no evidence that Ethereum is going to start outperforming over any sustainable time frame.
Wow, look at that. It really gave back all of its alpha from that ETF move.
So I think I like to own Ethereum. I like to own Bitcoin. That I feel like I own the Apple and the Microsoft, right? So you want to have legacy positions in those, but you don't want those to be your largest positions. They're not close for me. You want your largest positions to look like this relative to Bitcoin. So this is Solana BTC. Those are the ones that you want to be overweight, that you want to have the biggest holdings, biggest weightings of, right, in your crypto portfolio. ones that look like this relative to Bitcoin, literally outperforming steadily and in a big way since,
Oh, wow. This is the relative chart.
yeah, Solana Bitcoin. So like I've been asking myself, added a little bit of Bitcoin exposures the last day, and I'm looking at the coins relative to Bitcoin, right? So here's another one, injected
Whoa.
BTC, right? You want them to look like this. Now, again, for perspective, this is ETHBTC. Moving in the opposite direction should not
It's a
be.
great juxtaposition there. Yeah.
So, all right, what else we got?
All right. Moving along. Let's see. BBVA, and this one's from our friend Wavy.
Go Bradesco. So this is a Latin American bank. Low internet today. Okay.
Nice stick today.
Yeah. Oh yeah, that's it. Okay. So flip it to a weekly here. Secular downtrend, but it's reversing it, right? So we're going way, way back here. So just to give you an idea, when trends reverse, the first thing you tend to see is a trend line break, right?
Yep.
You got that. We could also draw a really nice breakout zone there. And then let's just show the actual rounding bottom or the reversal pattern itself, right? So from left to right, nasty downtrend, bottom starts forming 2018, even 19, right before COVID. You get this bottoming formation start to play out. You get the trend line break, right? Now I think it's these prior cycle highs. 2017, 2018 was a big year. A lot of risk assets peaked in 2018 outside of the US and are still dealing with those overhead supply levels. BBVA, really good example of that. Call it 9.25, maybe 950, right? Above there, this base is in. And, I'm talking about a long-term structure here, but the path, the least resistance is then higher. If you want to play it against that 950 level, yeah, new uptrend.
Where would you maybe be looking for targets?
First stop, probably 1350. Right here, we could drop a fib and see if that gives us anything good.
Yeah, I was looking at those highs too.
Don't love the fib. I would just use like some price memory, right? So you got big high there, between 13 and 14. Another key high from 2011 here, around 1950, 20. So those are two stops along the way, but then it's those old all-time highs, 25.
Yeah. Very slow kind of reversal process, but a reversal nonetheless.
You're gonna get a nice dividend here, yeah. For 2/3 dividend yield. And look, this is what Latin America is right now. So if I could just illustrate that quickly, here's the Latin America 50 or Latin America 40. Doesn't look just like it, Pat.
Oh, wow. Yeah, that's
right?
a
So
good point. You said that one was a Brazilian bank, the one we just looked at, right?
I think so. So these like mega downtrends, decade-long downtrends, slowly reversing. BBVA would be a optimal vehicle, I think, to gain some exposure to Latin America.
All right. So next up, we have another semiconductor, and this is one that I've been seeing a lot of people talking about is Rambus, RMBS.
Yep.
And Steve, I'm going to mute myself real quick just for about 10 seconds.
Rambus. Kenny Glick loves this one. Wow. Yeah, big old base here. Let's just flip it to a monthly and have some fun.
A lot of these semis, you really have to zoom out on them because they're dealing with either 2000 highs.
And if you're around long enough, you tend to know these names, like something like BBVA, kind of know, okay, I want to at least go back to the financial crisis, right? Something like Rambus, I remember this one too. This was a .com darling. I want to go back to the .com bubble, right?
Yeah.
So look at this .com bubble base, which we just see so much in the land of semiconductors. And when these things go, you want to be patient and you want to be involved, right? But if you're going to be involved, you got to be patient with these things. Traded these patterns so much. And with this one, you would want to zoom in at this point. You know that your target's here, right? Your target is at the old all-time high, so call it 125. So then you want to drill in. So let's move it to a daily, get tactical on what would that entry be? Because this one is just like a nosebleed, of an uptrend, just straight higher for several years now. And you get these little consolidations along the way, right? Like right here, and now again right here, right? So you want to just play the resolution of this consolidation. I think you would want to define your risk probably at this little shelf pivot highs here from December and November. Call it 70. You could go down as much as maybe 67 to the highs from May. 67 to 70. That's your zone to play it against. I mean, you're right there today, right? With a little throwback, I guess, just to these pivot highs from late last year. I think that's pretty actionable, right? Because if you take a step back, right, we have this massive uptrend in the context of just climbing up the right-hand side of a multi-decade base. Then you get, 6-7 months of sideways here, right? So this is kind of where you want to participate in trends like this. You get 7 months of nothing in a, uptrend that's just been screaming higher. Yeah, you want to figure out a way to get in on a consolidation breakout.
Yeah.
Pretty much what's happening right now.
Yeah, kind of multiple trend or multiple time frames at play here. But we're finally done with the mailbag, so we get to move on to the chat. Let's start with one of Donovan's picks here. Avago, Broadcom.
Ooh.
I
I
still
was
call it
joking.
Avago, AVGO.
Yep, I was joking this morning that Nvidia this year has been doing a Broadcom.
Right, right. And what did you mean by that?
We have fun. I mean, this Broadcom chart, I'm still kicking myself over this one. I saw it happen and I wanted to be involved. I missed it.
I mean, it happened right after Nvidia. I think it was the week after, right?
I wanted to get involved in this November, December of last year. Missed it the first time. Didn't pull the trigger on the retest. And then look at what happened. Just crazy, crazy move higher. And you look at Nvidia, just since, January, it's up like every day this year.
Oh my gosh.
Something really similar, right? Where you got the consolidation break, and once it went, it really went. So Broadcom, as strong as anything out there right now. I've been talking a lot the past few days about how at least the early AI secular trend leaders have emerged, right? This time last year, everybody wanted to know, what are the AI plays? And we could have speculated, right? But really the only AI play back then, the only company that was actually making money on AI was Nvidia, because they just opened up the gates for everybody by selling AI chips. Now we have 3-4 more quarters in the books, and we can see what companies now are actually using those Nvidia chips. Most of the time that's the case, and making money in AI in their own right. And Broadcom is one of those names, whether it's Broadcom, Aristanet, ServiceNow, Supermicro, right? We now know, who these early leaders are. This one's very much in that conversation. With Broadcom, just a tough one to get into here. I would love a little more weakness than just this. What is momentum doing? Because in a name like this, I mean, just incredible. The way this thing just keeps pinging overbought, confirming these new highs, is just wild. So let's see where the fibs get us. But Pat, as you know, these trends can be tough to get into.
Yeah.
As my story kind of just told. I miss a lot of stuff though. So that's just me.
You know what? I think you might. Yeah. Okay. Cool. Perfect.
I think
That's where I was going to say you might want to fill out that big base there. And that's exactly what you did. But you can see, I mean, it's stopped at every single one of them so far. I mean, it's only been 2, but
yeah. This whole zone here, 1100 to like 1150, even all the way down to 1050, right? You could get it back in there. I think that would be a really, logical level for some corrective action, to bring us to, and then even more logical level for some demand to show up in a tradable low.
I agree, but I also wouldn't be surprised to see it just continue higher to that next fib without ever checking back. I mean, the strongest trends do that. So
these large cap techs have had just such strong start to the year. It's really impressive.
Yeah.
Next stop, 1500, that 423
That's insane. You want to take a look at Merck next? This one's from Alex.
Merck looks so good. Speaking of missing things, Merck, talk about a big base. Wow. Hey now. So that's the base in Merck. This is a monthly chart, right? And again, they could be slow to start, right? Failed in February 2020. Kept absorbing overhead supply. Took a couple more shots. Big resolution out of that base. And then sideways for a year. This is a year here, right? Looks like a top.
Yeah.
Love it when they're not tops.
And it kind of poked through too, didn't it?
Oh yeah, look. And they're the best tops. Because it's like, if you zoom out, you're like, this top has to fail, right? Because
I mean, I hate to say it. I hate to keep talking about it, but this move in Nvidia started off as a failed top.
Yep.
Absolutely. You know, I mean, we were talking, everybody and their mother was talking about a bearish head and shoulders 3 months ago.
Yep.
And in the past 3 months, it's added the equivalent of a Tesla, more or less, in market cap.
It's incredible. Really is. So something similar here with Merck. If we're above 118, the pivot highs from May, next stop 136, 136.80, I think. And then after that, again, we're just fibbing out this monster.com bubble base. And if we wanted to fib out, hold on. You could also do it like this, Pat, right? For maybe a more tactical target. Just look at the, this base here. This is a daily.
Oh, I see. Man, this thing it's another one that's breaking out in multiple time frames.
Yeah, so again, above 118, you could do these targets in a number of different ways. You can even measure this, but the fibs get you to around 130, 136, and then you want to start looking at the secondary fibs because, again, monster base, you don't want to take profits too soon.
Yeah. Let's move on to Celsius, 1 to 3 year hold.
Not a cryptocurrency.
Not to be confused.
Okay. Look, is this going to be another one of those not a tops? Maybe. So why do I say that? Let's see.
Man, look at how much time it's spent hugging that Fibonacci level there. 51 there.
Yeah, so it's right on it here. You know, like we were just talking about, when they're not this, in the context of this, pretty exciting, right? So this one, right back down to such a logical level, over and over and over again at this 50 zone, right? Once you got the breakout and you gapped into it, right? So you got the breakaway gap here, and then test it once in October, again in November, again in November, again in December, again now. We hold this 50 level, start reversing higher. You could use something like these pivot highs here for confirmation, right? The highs from November and January, about 62.50. It's go time, right?
Yeah.
That gives you confirmation that it's not a top. And it's probably actually a continuation pattern. So then it'll be next stop 74.25. And I think 1 to 3 years, right? So
yeah,
12. 112.
I mean, it almost looks like it could, another scenario is it could kind of build up out a base here, right? Don't you think? And kind of complete like it could complete like in the summer or so, but that would make sense.
You mean a base like this?
Yeah, exactly. Yeah.
Yep. You know, when they're not failed tops, then you could eventually flip that arc around and draw it the other way, right?
Yeah.
So 50 needs to hold, right? 50 absolutely needs to hold. And I get it. You know, this has been a hot stock, but it's still a staple. Still a staple. So maybe not the first group I'd be running out to buy.
Is it in the consumer staples sector?
I mean, they sell drinks, Pat.
Oh, yeah, you're right.
I would think it's a staple. So yeah, 50 needs to hold. If it does, I think at those pivot highs, you can start thinking this is actually not a top. We're continuing. And then you got some nice targets here. You know, the 423, about 112, give you almost a double. So I do like that. These guys pay a dividend yet? Nope. All right. This one gets asked about every time we do this show. Let's move on.
Yeah, it's definitely a popular one. Let's move on to LBRT. This one's from Nick.
There's just too many of these stocks, man. So this is John Malone's media empire. Oh no, it's not. Liberty Energy. Okay. I thought this was Liberty Media. Thank God.
Huh. Wow, some big moves in the last few days.
Great chart. This must be, looks like an MLP. Is it not? Looks midstream. It looks midstreamy to me. Services. Almost 1.5% yield. Fracker. Hydraulic fracturing services, also onshore oil and nat gas exploration production. Denver, Colorado. It looks good. It looks better than most. Not quite as good as Marathon Petroleum. You seen that one, Pat?
No, we can take a look at that one.
I'll bring it up next just because what a ripper today. So
Ho.
yeah, I know. And that's your leader too. It's like the biggest refiner, up like 4%. What's it
You
telling
know,
us?
I know we had the two biggest components in XLE reporting this week, Exxon and Chevron.
How about that theme of leaders leading just continuing to come up in our conversations today and here?
It's almost like that's what their job is, right?
Crazy. $20. We're above 20. I do like this LBRT because this is basically the situation in energy right now. Big move off the 2020 lows. Underlying trend is higher. And then just stuck in a sideways mess since 2021. Some started in 2022, but just multiple years, up to 3 years of just sidewaysness.
Yeah.
Nothing. Off of just a major automatic reaction off the COVID lows or the fall 2020 lows. You would think you want to err in the direction of the underlying trend. You would think that these ranges do eventually resolve higher. Starting to see it a little bit with names like Liberty here today. So above 20, next stop would only be about like 23, 24 here, those old all-time highs. So probably want to fib this one out and figure out a further price target.
Yeah, because all these energy stocks haven't gone anywhere for like 3 years, like you said, it's easy to forget about that massive move that they made after COVID, right? Because they haven't been doing much for a while. But when you look back at that, I like the way you put it there. If you want to err in the direction of the underlying trend or the prevailing trend,
Or if you want to err
and
in the
these things
direction,
haven't broken down yet either. Like they just are hanging in there, basing.
right. Or if you want to err in the direction of, energy leaders, let's look at what some of the leaders in energy did, right? Because this is the same pattern. This is the nuclear ETF. It's just full of a bunch of uranium names, right? So what are we talking about? Straight higher off of the 2020 lows, and then just nothing for what felt like too long, probably. So wore some people out, exactly what you want as a bull, right? From what? June of 2021 to June of 2023, 2 years of sideways. And how did they resolve? Higher. And I could show you the same example with coal stocks. So these leaders, these subgroup leaders in the energy space have already kind of established the playbook, right? Or laid the groundwork or shown energy the path that they can potentially follow from here.
Yeah, I like that you've been kind of making that bridge between energy and what's going on there, and then nuclear too. Because I often forget nuclear is a part of energy.
Well, it's not. And I know there's people in the chat right now like, hey, what's he talking about? Those are material stocks. S&P Global and MSCI might tell you that they're material stocks, but their coal and uranium are actually energy stocks to me. At least thermal coal. I'll give you the coking coal. You could keep that in materials. All right, what else?
Yeah, so I was trying to find some more oil names. If anyone wants to see anything on the energy,
One
before
more
we.
name. Pick the best name.
Well, so Mark was saying that Marathon is a beast. So why don't we just look up Marathon real quick because that is quite a candle today.
This is the one. I shared this one in the chat with the portfolio accelerator clients this morning. This one is just so good. The fibs don't really give you much, but I don't really think you need them in this case. Just want to find a logical level to get involved. And I think it's on the resolution here today. So, 133 at this fib was probably a decent level to enter a trade. But now, this base has been completed. See the base completed right here. And today, we're getting another pattern completion, just a shorter term continuation pattern, but not super short term. I mean, this thing's been coiling since August, right? So we zoom in. Okay. I'm going to draw this something like.
What a move. Did they have earnings today? Is that why? Yeah.
Yep. We want to draw this like this, a nice little flag.
A couple of people are saying WFRD.
Weatherford.
Yeah, that's been a leader.
What about it?
Oh, not today, but I see
So,
up until, yeah.
MPC. 160, 159, right? Is that resolution levels? It's kind of running away from you already, up 5% here today. But maybe do something shorter term. Let's see if we fib this out from here. Gives you something. How about that? 230. Right. So I just fibbed the summer drawdown from 2022.
Yeah, I think the bigger takeaway with this one is just that this is what some of those other oil stocks that look very similar to this, this is how they could kind of resolve too, right? This is kind of giving us a roadmap for what the others could do.
And interestingly enough, the leaders have been now in energy for a while now, the services, but even more so the refiners and the midstreams, MLPs. That's where the strength has really been. So, this is the best looking refiner, hands down, and I believe the largest. So, good spot to get involved. Here's AMLP, just to make that point. These midstreams, looking good as well. So, plenty of opportunities, with XLE and crude oil and gasoline, all just digging in a few weeks ago at the lower bounds of their ranges, and now making, at least for the energy futures, making some multi-month highs. This is what the consolidation XLE looks like. So patience. I do worry about opportunity cost with a lot of these trades, but I think if you have a long enough time frame, you'll make up for that, because I do imagine that once these consolidations finally resolve higher, like something like coal or uranium, they're more than going to catch up, and at least enjoy a period of leadership, right? Where you will definitely outperform, maybe make up for some of that opportunity cost that you have to pay for in dealing with these ranges still needing to make, their ultimate resolution.
Yeah. So we got a bunch more to get to here. Do you want to
No, I can't do it. Sorry. I'm
jamming. Want to wrap it up?
I'm already 5 minutes late. So
all right. We gotta leave it here, but
what?
We'll leave it here, but we'll try to make a note of these. Maybe we can get to them next time, or just join us next time. We'll be doing this again on Thursday, right?
Come on back on Thursday. Bring us those requests, and Patrick will hit them then. Sorry, I do have to hop today. But Pat, you got anything else?
No, you did a great job, and it was fun looking at some of these energy names. And Curtis here in the chat brought up COLL, and I was just looking at that one. That's a nice one to check off, or check out once we're done here.
Well, thank you everyone, as always, for joining. We just absolutely love doing this show, love getting to interact and chart the stuff that you guys are watching. So we will be back on Thursday. Please bring those requests that we didn't get to today. Thursday at 1 o'clock Eastern time, Patrick and I will be right here on Stock Market TV with the next chart request live. In the meantime, join us every morning for the morning show, 8:30 to 10 o'clock Eastern time. Thank you, everybody. Have a great week.
Thanks, guys.